I'm still not a robot.
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents or independent contractors are in such capacities licensed financial advisors, registered investment advisors or registered broker-dealers. Nothing contained in this webinar, website or promotional material constitutes a promotion, recommendation, solicitation or offer of any particular investment, security or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone.
All right, I got to get a faster thing. That's too slow. Let's see. I don't know if they have a faster speed on this or any kind of adjustment. Must be a way to make it work. Oh, well. Anywho, so it is already January 29th. I don't know about you guys. I mean, for me, this month has flown by, but I guess this guy started the month in Thailand. And I got back from Thailand, like, I forgot. Must have been the 5th around. So I got back on the 5th. So I guess it might be why this feels like such a short month to me. But, and then we had the holiday weekend. So I guess, yeah, you can see where it flew by. It's crazy, though. Anywho, I hope the whole year doesn't go by this fast. I want to enjoy the 2020s. I want to relax and enjoy them. What's going on? Oh, yeah, market. Right, yes, market. Oh, yeah, I wanted to short. Okay, so the Russell's already turning down pretty sharply. And I think we want to just add a couple of shorts. So let's do that. I think I took them off earlier because we called, I called the bounce earlier in chat. Oh, I never stopped out of that one. Shit, that never filled. That pisses me off. So I'm just going to add another single short on all these. So who filled? The Dow, no, the S&P filled, I think. But that was an averaging fill. And these guys are not filling because they're already coming down. So I'm going to have to move that down. That filled, and I'll move this one down. And that filled. Okay, so where are we? 28.8 basically, and 91.28, and 2 at 32.82.5. So those are reasonable places. I don't mind being short there. And then oil is cheap, so we should look at that too. Is everybody here playing? What is this? Oh, that's natural gas. Well, there's not much profit in that, so there's no point in it really at the moment, so don't worry about it. But oil got nice and cheap. Oil came down back to 53. Well, not quite 53. So I don't know if that's worth taking a chance, though. Ooh, look how high RB still is. That's interesting. Now, why would that be? Let's look at the EIA and see what happened. Wait, no, that's going to be Weekly Petroleum Status Report, January 17th. That's not the right one. January 24th, much better. Okay. Crude oil imports, blah, 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 blah. Here we go. Crude oil inventories up by 3.5 million. Inventories are 2% below the 5-year average. Gasoline increased by 1.2 million. That's, well, they both increased. So that's bad. So that's 4.7 up. Distillate fuel decreased by 1.3. So net is basically 3.4 million up. That's not good. It's lower demand, and that's going to obviously upset people, which is why oil went down today. And obviously that has nothing to do with China. How much oil is in the US has nothing to do with China. And clearly we're exporting the same amount we keep exporting, 3.2 million barrels a day. But again, 3.2 million times 3.2 times 7, 22.4 million barrels is being exported by us every week. And how much do we use a day? Not even 20 million. So we don't even use 20 million barrels a day, and we're exporting 22.4. So we're exporting an entire day plus of our total supply of product. So it's you know, I talk about this a lot, but it's just an important point. It's such a distortion in the system because, oh, and by the way, all other oils also went down. Oh no, down is good. I'm sorry. All other oils went down. So net, you see how it's 1929, 1930. There's really no change in inventories overall. So the big picture is not a big change. So that's why I felt the oil sell-off is a bit overdone. But on the whole, you just got to realize, though, all the demand numbers you see for U.S. oil are fake because, you know, it's as stupid as if you say Macy's ordered 500 coats. Boy, that store wears a lot of coats. It's like, no, the store didn't order the coats to wear. The store ordered the coats to sell. We are ordering 22, whatever the frick number that is, 22 million barrels of oil. We're ordering that to sell. We're just a store that processes. We're a refinery. We are refining oil for other people. Okay, we're not demanding that oil. That oil is not being consumed in the US. Yet, if you look at what the US oil consumption is, every single place you look, there you go. How much oil does the US consume? The United States consumes 7 barrels of what? Okay, 19.96 million barrels a day. Okay, this is not true. We don't consume it. Okay, it's not consuming when you take a barrel of oil and you turn it into gasoline and you sell the gasoline somewhere else. You're not consuming it. We are not turning these export numbers. We're not consuming this for ourselves. And yet you will never hear an analyst talk about this. You know why? Because it's too complicated. I've had this conversation with people who interviewed me because I start talking about it and they're like, oh, well, we don't want to get into that because that's very complicated. I'm like, it's really not that complicated, okay? You have to say that, you know, say about 15% of the oil that is imported into America is not being consumed in America. It's being refined for other countries. Therefore, U.S. consumption is 15% lower than you think. You just have to imagine how many cascading errors in extrapolation and statistical analysis are made based on the fact that every single number you see is wrong by 15%. That the assumption of our consumption is 15% higher than it really is. That's messed up. Okay, that's you can't. It's very hard to have a rational discussion when you have these sort of discrepancies. It's crazy. It drives me nuts. I'm sorry. It just really bothers me because it throws off everything. And then I read articles, and the articles are always just wrong. They just like talk about U.S. consumption. Oh well, actually, you know, U.S. consumers are still doing this. And the thing is, this number used to be 1 million barrels. Only a few years ago, it was 1 million barrels a day. So our exports have gone up tremendously, offsetting and masking the very large drop in demand for oil in this country. We demand much less oil. Why? Cars got more efficient. We talk about this all the time. But anyway, so those are reasons that oil is not going to come ripping back. But on the other hand, this is nice and low. So I kind of, you know, especially there was an attack on a refinery today. That was the weirdest thing. But this was the attack, you know, in Yemen or something like that. the Yemenis attacked an Aramco refinery or some such thing. They shot missiles at it. So the oil spikes up because they shot missiles at a refinery, but then they missed. And then oil goes down because they're very ineffective, which I find hysterical. It's like, well, maybe they'll hit it next time. It's the weirdest concept. It's like oil is now lower than it was when it started going up because, and you could say because, it's obviously none of this had anything to do with the inventory report. So oil went up because the Yemeni, whatever they're called, they attacked the Aramco refinery with missiles. The missiles were pathetic. I mean, like laughably pathetic, apparently. And so the initial report shot it up. Then all of a sudden it sells off much, much lower than it was in the first place. So I'm still kind of waiting for 52.50 to come back to really get into being long. Because the last time we only made $1, we got out of 53.50 and we were done with it. We weren't interested in keeping. So it's just for a quick buck on a bounce, but it's certainly worth watching because anytime you get to 52.50, the Saudis will blow up their own refinery for 52.50. So what was it? Let's see. Aram, I guess I could say Aramco attack. Aramco attack. How would you like that stock if it's being? How would you like a stock went? Yeah, look, it's Yemeni. I was right. Yemeni rebels target Saudi Aramco and Jazan. Okay, so many things we don't know. I couldn't point to Yemen on a map. I couldn't point to Jazan on a map. Drone attacks. They were drone attacks. I thought they were missiles. Well, I guess the drones might have had missiles. Who knows? Saudi air defenses thwarted attack on Aramco. Ooh, that's a good one. I like that. I like the tone of that article better. Iran-aligned Houthis in Yemen said they targeted the world's most valuable company and other sites in Saudi Arabia. I don't think they said it was the world's most valuable company. I don't think that was really their narrative on the situation. So Saudi air defenses last week. Oh, it was just reported today. Apparently, this happened a week ago. It targeted the world. Oh, that's why it spiked down so fast because it was a story, but it was a story, and then everybody reads the story and goes, "Oh, last week." Okay, so let's see. Yemeni rebels claim responsibility for attacks. Saudi Arabia and the U.S. blamed Iran. Of course, who backs the Houthi rebels? Iran denied it. Wow, what a surprise! Since the attacks last fall, it's funny. Just this morning, I said, "Whatever happened to Iran? Weren't we worried about them for a while?" Since the attacks last fall, Aramco, they did their IPO. Blah 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 blah. There's absolutely no news here at all. Oh, it's a 400,000 barrel a day refinery. That's pretty funny. We are exporting 3.2 million barrels a day, and this is a 400,000 barrel a day refinery. It's the amount of effect it would have on the global oil scene is negligible. Yeah, so if all you're attacking people with is basic drones, it only takes very, very basic air defenses to knock down basic drones. Of course, unfortunately, that's the expense of having to have them in each refinery. But it's just one of those like computer guided missile things. I mean, your standard video game has them, right? Like if you're playing a video game and there's like an anti-missile thing in there, it just shoots down things that come at you, right? It goes bip, bip, bip and fires and shoots things down. That's all it is. It's that hooked up to a real missile. It's not a complicated piece of equipment. You can have it in your iPad. So that's why that's not really considered a threat. But nonetheless, so oil is just retrending back down, but it's going to be definitely something we want to put some money on later. Now, as far as the market goes, again, I'm seeing no indication that this virus thing is over, yet the market acts like, if you're looking at this thing, you're like, here's, this is Tuesday. So Monday, 3,000 patients, 4,000, I'm sorry, it was here. I can't go further back. Anyway, so at the beginning of Monday, it was, 2,000 patients. Then it was 3,000 patients. Now it's 45. I'm sorry, it was at the beginning of Monday, it was 3,000. Here it was 4,500 yesterday morning. Now it's 6,000. And tomorrow, it is very possibly going to be 9,000 people infected with this virus. If it's not, that'll be good news. Okay, because at the moment it's spreading 50% per day, more victims. If it's, what we're looking for is for it to start trailing off. But as we noted yesterday in our chat room, and this is a very important chart to look at, because you got to, oh man, what's this? I'm more of a mathematician and a physicist. So, I mean, I look at all science kind of like it's physics and math. And you could say it's a little different for medicine, but I don't really believe that. Because I think that, I mean, obviously everybody does whatever their branch of study is. Oh, that's not even the thing. Wait, maybe I was in the post. I had a good chart somewhere. Oh, here. So, as I pointed out, we're at four. This was literally yesterday's post. 4,500 infections yesterday. Here's where we were on Thursday. When they say Thursday, they mean last Thursday. Last Thursday, 581 cases. Today is Wednesday. We are at 6,000 cases. Understand, 581. You're on par with SARS. That's 30 days, 60 days, 80 days. Okay, 100 days. We are at 30 days. Not 37 days. This is 37 days. It's not very likely that in the next 7 days we're going to be leveling off like this. We're doing this on massive steroids right now. Okay. Now, there was this part in SARS where it peaked up like that and you would have been just as alarmed. So it's possible that we have hit that, but still you've got quite a big ramp up before you start plateauing. I don't think we're anywhere near that ramp up. So you have to think psychologically of what's going to freak people out. Well, tomorrow, if we're at 9,000, that means we're certainly going to be over 10,000 by Friday, tomorrow being Thursday. So it'll be over 10,000 by Friday. That's obviously more than SARS had worldwide total after like 6 months, basically. It's 5 months. I guess there was 5 months basically for that outbreak. We are only in the beginning of the second month. There's no cure. All there is a vaccine. We haven't developed a vaccine yet. You have to first develop a vaccine. That's going to take more than 7 days. It's a 30-day thing to develop a vaccine, at least, even with the greatest gene sequencing in the world, which we have. I mean, obviously, we have all the best gene sequencing now, way better than we did 10 years ago with SARS. But it's still, it's not a miracle. But then you have to create and distribute tens of millions of doses of the vaccine. So you're talking about a 2-month, 3-month process before you can start vaccinating people, which is what happened with SARS. It took months to produce, develop, and vaccinate, and so on and so forth. And also, by the way, it dies out though. People are more susceptible to colds in the wintertime. And it just happens to be the worst possible time it could be hitting us, because it's hitting us right during the cold and flu season. So you have to think of the thresholds that you're going to cross. So Friday, 10,000 cases. So tomorrow, they're going to go into the weekend with 10,000 cases. You know what? If we have 10,000 cases on Friday morning going into the weekend, we're going to have 20-something thousand cases coming out of the weekend, at least. And then the death toll is going to start climbing. Then the next threshold you're going to hit is when you go from 10,000, 20,000 cases, you could be at 100,000 by the end of the next week. But more importantly, your death toll is going to go probably 100 now, 130, 160. There'll be 200 plus. There'll be more than 200 people dead by the end of the weekend. So when you hit 1,000 dead, people are going to start freaking out. 800 people died from SARS. You're going to have 1,000 dead people. That's going to bother people, and that's going to happen unless it slows down, unless you start seeing this kind of plateauing. And this plateauing took a month or 2 weeks or a couple of weeks anyway. It took a couple of weeks just for this thing to start slowing down. We are not even close to slowing down because, like I said, we went from here. We're accelerating because we're here, except here in time. That's the trajectory this is on now. Here, not here. Here. I just cannot believe the complacency that it's and again, I'm saying it's math to me, okay? It's like, this is not good. This is a very bad numerical progression. And they're talking right now on CNBC is talking about Boeing. They're talking about the impeachment and so on and so forth, but no, they barely mention the virus. It's like incredible how little coverage this is getting when it's such a serious issue. Everybody should be made well aware. Now, the World Health Organization is getting together tomorrow, and they are going to probably declare a global state of emergency because tomorrow you will see 10,000 cases and you will see a couple of hundred deaths, and they will probably finally say, oh, you know what, we should start taking this seriously, guys. Now that it's worse than SARS officially, we're gonna start calling it a real emergency. But will that affect the market? That's hard to say. Now the Fed, of course, is coming up in a half hour, so we'll see what the Fed has to say. Given this situation, I don't think they're going to lower rates, but they're certainly not going to raise rates, and that's been boosting the market because now the Fed's like, well, we can't go boosting rates and have some kind of pandemic outbreak that drops everybody's economy. They'd rather be, in this case, they would certainly rather be wrong by having too much of a boost than not enough. Because if you take, if you were to raise rates now and stall the economy, and then it gets hit by a massive outbreak of a virus that starts infecting America and so on and so forth, you are not going to want to be the Fed and have to explain that to people. So, and obviously, and of course, the president would have a fit and so on and so forth. So it'll just have to get dealt with. So almost certainly the Fed's going to say they're on hold, and they'll say, given other uncertainties or given that we haven't had time to assess the effect of the China trade, blah blah blah. They'll say whatever they say. But that's where we are. So meanwhile, though, yesterday also we talked about this that's UNG. On Monday we talked about USO. You can still get back in that trade now because oil's back to kind of where it was on Monday, because on Monday we were right about here. So you can still do this long-term trade on oil. But by this summer this will be over. The virus thing will be over. And if it's not over, the world's over. So it doesn't matter if you had a bad trade. So on Monday, this should be over and we should be able to make some progress. And we'll see what happens. Now, let's see how we're doing here. All right, he's down. Okay, it's no big deal. See if anybody has any questions. John says, ugh, I hate this GoToWebinar format. I can't hear any sound. I don't know why. There's no app control for sound adjustment, nor can I see anyone else's questions to know if they're having the same problem as I am. Then John says, okay, restarted, sound is back on. I'm glad we got to review John's saga. Yeah, I don't know why. It's just the way it's set up is that you can't, the questions aren't shared. That's why I have to read them out, which is kind of annoying for me too. It's like I have to read everybody's questions out. See, Tom says, in Canada, the virus is still in full-time news. You know that, Tom, because in America, we are literally treated like children, and they decide what news we can take and what news we can't take. And your country actively fights against this, and you guys don't consider Fox News news. You don't allow them in the country because it's not news, which is good. Our news is dictated by what they feel that the viewers want to see and hear, and we don't like to hear horrible, scary things about viruses and such. So, excuse me. Speaking of viruses, right now I'm sneezing. I don't think I have a cold, but hopefully not. I think I got out ahead of the virus. That was my number one fear of going to Thailand, was getting an Asian virus. And I'm not one of those people who worries about that stuff. But just realistically, I was like, well, you know what? I can get some virus that that's not usually found in America, and I'm not going to be immune to it. So I was in no mood because productivity-wise, I just can't take a week off. I don't have time. Oh, this fire in LA is terrible too. So I'm watching the TV. There's a fire in LA. Now I was watching. I noticed the TV because the Democrats are Schumer is talking about some impeachment thing, but CNBC cut to the fire in LA, which is actually kind of under control. So I don't know why they're skipping ahead. So anyway, let's see. So the virus is in the news, right? It's not that it's not in the news. Let me see. Oh, I'm sorry. I take that back. It's not in the news. CNBC News update. Number one, impeachment trial. Number two, supporting witnesses. Number three, an update on the Los Angeles fire. So it didn't even make their top three items of the news in over here. They've already moved on. It's not interesting anymore for them. But let's see what is interesting. Okay, so we talked about this. If somebody remind me later, if oil gets down around 52.50, I definitely want to take a long on that. But meanwhile, we'll see. These are getting higher and higher. But like I said, I think it's a good opportunity. Look, last week we did it, right? When the virus started, we did it, and we got rewarded by some huge drops on early this week. In fact, I think I logged that on Monday, didn't I? What did we have last week? I mean, this is what's going on in China. This is Wuhan. It's empty. There's not a soul on the streets. There's no one around. The stores are closed, and it looks like an apocalypse movie. And we're like, la-di-da. This is what it looks like at the hospitals. People in hazmat suits. So funny. So what do we do? Ah, yeah, right. So last week, and we did this at the webinar, we were talking about these shorts at the webinar. So we were shorting here, and we got this massive, massive drop down to 9,000, and now the Nasdaq is at back to 91.39. So where did we start? We started way high though. We started 92.50, 92.75. So we're nowhere near that. We're in the middle. We're about here. So the trick is, are we going to go back over? Where's those FinViz charts? Oh, by the way, John. Okay, so John, when you don't have sound, it is just you. Okay. If a lot of people didn't have sound, first of all, Greg watches the comments in case something urgent is going on. So if there was something there, if a lot of people didn't have sound, we would do something about it. But it's usually some individual connection issue. This is this is like Cisco or something. This is a pretty good system. This GoToWebinar. And our consideration, it's not so much. We looked at. We must have looked at a dozen plus of these conferencing systems because we had to dump our old one because something happened to them. I think they went out of business. And although we don't love the user experience on this one because, like you said, you can't follow the comments and so on and so forth. But as far as utility-wise, reliability, sound quality, so on and so forth, that's what we picked this for. Apparently some people do have problems if they log in, if they're, for whatever reason, they don't get a good login, but all you have to do is relog and it usually fixes it. So I do apologize if there are any difficulties, but believe me, most conference systems are much worse. It's very hard to find a good one. Now, what were we just going to do? I forgot. I was talking about the shorting, right? Oh, yes, FinViz, right? There you go. Haha. So looking at let's do 5-day chart. Let's just kind of look at the week. So where were we? This is the 29th. So last week was the 22nd. So we were here. Okay, and that's the same place we shorted on Friday when we were shorting the webinar. We did the same thing, right? So we shorted the webinar. We got a nice dip. It came back. You got to stop. Oh, by the way, you got to stop out. When you make some nice money, stop out. Don't be greedy. Even here, the thing is, we were shorting here the webinar last week, right? On this line, about 29.2. We got to drop to 29.1. On the Dow, that's 100 points. That's $500 per contract. You make $500 per contract and it starts going up and you give back 25. Stop out and take the money. You know, stop at, if it goes up 50 bucks, whatever, out of 500, it goes to 450, especially if it goes to 400. Stop out and take the money. Because you know why? The faster you stop out, the faster you stop out, there's no harm because you're already over the 29.1 line. So all you're going to do, and this is why people think I'm so good at these stop outs. Okay, everybody's like, how do you know? How do you know? I don't know, but what I do know is if I take the 500 off the table the second it crosses back over the 29.1 line, all I have to do is go back in when it goes back below the 2900 line. I didn't miss anything. You understand? If you stop out at a significant line when it crosses back over, I mean on a bounce. So in other words, it goes below the 29.1 line for a little bit. As soon as it goes back over, stop out. Wait for the momentum to stop. Wait for it to come back under, not bounce off it. Wait for it to come back under and get back in. All you do is miss a few points that way. So what? But then you use the 2900 as a stop line, and the 20 whatever line it is, use it as a stop line, and then you don't get burned again. So either way, it's the point of the, I mean, this is maybe not enough to trigger a stop here, but either way, whether you stopped out at 29.1 or whether you stopped out at 2900, that's 500 bucks, that's $1,000 bucks. And if you played it right, you would have made $1,000 either way because you would have gotten back in when it went below. Okay, then it comes back up, you stop out again and you wait, but then it got all the way back to 29.2 on Friday, so we shorted it again. Into Friday's close, I said, let's short this again because it's too high. We're right back to where we liked shorting it on Wednesday. So of course you're going to short it again. It's the same freaking line. And especially when it crosses below the 29.2 line, because then it's easy. You say, well, if it goes back over 29.2, I'll stop out, and otherwise I'm going to let it ride. We let it ride. When it got down here, I said, you know what? I'm going to leave it over the weekend. I think I said that in Friday morning's comment. I think I said that Friday morning, didn't I? Let's see. I believe I was pretty clear about that on Friday. Nope, that's a portfolio review. There it is. See, and I was calling it on Friday morning, saying it's a week because this is where we were as of Friday morning. And I talked about shorting the NASDAQ. So I said, we're too short on the NASDAQ at an average entry of 29.71, and I'd be more likely to add to them if they go higher than stop out ahead of the weekend with China locking down, blah, blah, blah. So this was the beginning of the thoughts about the virus being dead. All right, so that was my read on it then. Now there's like 50 million people on lockdown, which isn't that much worse, frankly. So they've got 50 million people in lockdown, which is not bad, though, because you consider it's probably kind of contained at the moment, like it's not totally broken out, or possibly it's so out of control that they're not bothering to lock anyone else down. It's hard to say. There's certainly a lot more cases. But, you know, there's 11 million people in Wuhan province, and certainly it's the genie's out of the bottle in Wuhan. So if most of those new cases are in Wuhan, that's the other thing. It's not just about how many cases there are, it's about how contained it is. As long as the cases are mostly in Wuhan, and they've got Wuhan locked down, which is a crazy thing to think about, like it would never work in America. But if they've got 11 million people isolated in China, and those guys are all getting sick, even if a huge amount of those people get sick, as long as it doesn't get out, it'll burn itself out eventually. Horrible as that is for the people who live there. But anyway, so that's what I mean when I said that. That's exactly what I meant. I said, you know, I felt it was very, very strong chance the NASDAQ could go down, so we stuck with what we have, and that made a fortune, of course, with the NASDAQ. Yeah, see, because we were way high in the morning on Friday, 2970 something. And I said if it goes higher, which I didn't think it would go past 93, that if it goes higher, I'd rather buy more into the weekend than less. As it worked out, though, we managed to hold it into the weekend and made insane amounts of money. So now we're kind of about halfway back, but notice that we're not getting over this 91.50 line. So that's my stop line now. So for my NASDAQ shorts, or how many do I have? One. I think I should have two. Can I get 91.40? There. There's a mismatch on this because it's not live data. Let's see. Whoa. No, that didn't take my order. Did it reject my order? Oh, no, it took it. Wow. All right, so now we're at 91.35 on 2. That's good. All right, so now I have 2 short here. So at 91.50, I'm gonna pretty much stop out. I really would stop out here, 57, 58, somewhere around there. I think I'd stop out. But I don't think any of these should be as high as they are. In fact, I can add my Dow too below 28.50. So let's see if we can get around. How about 40? 40, 40, 40. Okay, never hurts to ask, right? So I'm going to put my thing up at 40 and see if we get a chance to add another Dow short. Then I'll have 2 of each and I'll be happy. And like I said, oil, I'm not going to go long unless we get a good price. So, it's the point is, it's like you try and you make money and you try and you make a little money and you try and you lose a little money and you try and you lose a little money and you try and you make a little money. You try and you lose some money. You try and you make some money. You try and you lose some money, but then you try and you make a freaking fortune. Okay. But the point is you got to take reasonable stops, and you've also got to be aware that when you make a few $100 in the future, that's great. Take it off the table. If you only enter near a stop line, like here we're entering, I'm at 35. If it goes up $15, I lose 20 times 15 is $300. So I'm risking $300 per contract above 91.50. Probably 400 by the time I stop out. But we made 5,000 per contract on Friday, on Monday anyway. That's worth it. I'm willing to lose a few hundred once in a while in order to be there when it makes a huge amount of money. And that, by the way, goes for the natural gas contracts, which we like to be long on when they're low in the channel, which it is again. So we went long again today, right about here, in fact. So we went long this morning here. In fact, here's us buying as natural gas is going down. This is our guys spiking and buying into it, and now we're waiting. It went up a little bit, but not enough to take it off the table. So we're going here, and we'd like to see 190 or 189 at least tested and see how it goes. But one day, we're going to get lucky and it's going to go way, way up and we're going to make a freaking fortune, but you're not going to make it if you're not there. So when it's reasonably along the bottom, we try to play it and we'll take some quick money on and off the table, but generally we're predisposed to having a long because one day that long will pay off big. Coffee too. Here's another one. Coffee is back to where coffee's right back in our buy zone. Not, right around, it gets down around here, and I don't care if it goes lower, I'll buy more. So right around 100, I'm willing to buy coffee, and then if it goes to 90, I'm happy to double down because it's very, very unlikely to go here. This is a point, below 100 is a point at which it doesn't pay for most farmers to grow coffee. So whether there's a surplus or not, the point is, if a coffee farmer is selling at a loss his entire crop this year, or selling it like not at barely break-even prices, he's not going to be very likely to plant coffee next year. He'll be not, well, let's say not very likely, because unfortunately coffee, farmers aren't that, I don't want to say they're not smart, but they're not, they'll just do the same thing regardless. I don't know how to say it more nicely than that, but they're not going to vary. They're not as likely to vary what they do, especially if you're in a coffee growing region and blah, blah, blah. But to the extent that any of them have a choice and can do something else, they will do something else because it's been another year planting coffee when you're not getting paid for it. That's crazy. And honestly, last year, same crop, right? Didn't get paid last year. Didn't get paid. Only if you were lucky enough to have just done a harvest and you caught this little bump here is the only people who got paid. But that's not what really happens. What really happens, there's a couple of crop cycles in the world. There's the Vietnam area crop cycle, and then there's the Vietnam crop cycle. There's the Ethiopia crop cycle, and there's the Colombia, Central America crop cycle. So there's 3 major coffee cycles, and they're various times of the year. So you have a lot of gluts, and you very rarely have any sort of you very rarely run your inventory down. So here, though, is the obviously in in the northern hemisphere is when you have your winters coming in. That's going to be the time when you have the tightest supply. But then as soon as harvests come in or other things happen, and other seasons come in, the other side of the world has their summer. So people in the southern hemisphere have their summer at that time. They start. This is their good season. They're probably harvesting here. All of a sudden, more hits the market and it goes down. So it's a messy thing. We're used to looking at crops from a North American point of view, but coffee is very much a global crop these days. Very freely traded and exchanged. Why? Because it's expensive. So it's shipped all over the world very freely. It's worth shipping coffee because it's $8 a pound, or I'm sorry, it's $2 a pound or $1 a pound raw material. But $1 a pound is still good money. Oil is not $1 a pound. So that's really what the key is how much per pound are you getting for something, and that makes it worth putting on a ship or not. And also by volume, there's other things. Oh shit, the Dow's going higher and higher. Look at this. So what was I saying? So that's something we buy when it's low. Silver came down nicely. Copper is down really nicely. At 250, copper starts getting interesting. Remember when I was saying the palladium was too high? So palladium's come back now to 22. It's still too high, probably. 2000 is probably the right price for palladium, but I wouldn't short it here for sure. Silver, this isn't, obviously it's lower than it was, but not really low. Gold is staying stronger than silver. Copper, though, very interesting down here. Okay, why is this? This is all about China. So if you want to bet that this virus thing is not a big deal, this is probably the best way to do, because it's impacting copper prices, steel prices, everything is getting impacted now by that. Grains are weird. I don't know what's going on. China just ordered wheat from 2 other countries, not us. And yet this thing says they're supposed to buy $200 billion worth of stuff from us. They really can't afford to buy from anybody else if they're going to stick to that contract. If they have to buy an extra $100 billion worth of agriculture from us this year, not agriculture particularly, they have to buy $100 billion worth of something from us, you would think that like crops would be high on the list because people got to eat. So they would want to buy that, but they're not doing it. Very, very odd what's happening. All right, so where are we? Portfolios, right. Okay, so going back here, I think we should review this because we're in a weird situation now. We'll see how things are being affected. Oh, I see. You always click on the virtual portfolio tab and you can see like the latest. Usually if I've got it up, you got the January review, which I just finished. And so now we are back to having a long-term portfolio and a short-term portfolio. Last time we did a review, it was we only had a short-term portfolio. So we added some cash. We had just the short-term portfolio that we started with $100,000. That got up to like 150 something, 100, whatever it got up to. But then it lost a bit too because now we screwed up this Tesla trade. So now we added 500,000 brand new cash to a long-term portfolio, but what we ended up doing was sort of adding $400,000 to the short-term portfolio. We renamed it the long-term portfolio, and then we made a brand new short-term portfolio with $100,000. That's what we did. It's just the same thing, but the way we did it. Why? Because we already had all those long-term positions in the short-term portfolio. So the sensible thing was just to rename that the long-term portfolio and move it. What is this? Oh, I see. That's why. So as confusing as that sounds. So now this is what we were doing as of whatever day this was. Oh, as of the 17th. So as of the 17th, this was what we were doing. Let me make that bigger. So I said this is now. So at the time on the 17th, we had 144,000 in the short-term portfolio. I said mechanically we're moving $400,000 into this portfolio. This becomes the new, and we're making a new $100,000 short-term portfolio whose function is to protect the new long-term portfolio, which is this portfolio now, except we then move things out. So I don't know if there's any questions, ask them. But in other words, the point is we have all these long-term positions in the short-term portfolio: Vail, Toll, not TLT, TD, Philip Morris, MJ, IMAX, FCX, CMG. Well, it's not really long-term. Sorry, not that one. So we had a whole bunch of long-term positions, maybe 6 or 7 or whatever. And these short puts are all for the long-term portfolio. So the easiest thing to do is to just rename the short-term portfolio, the long-term portfolio, and add 400,000 to that. That's what we did. All right, so that's where we are now. And then we have a brand new short-term portfolio that we move positions into. But we closed these things out, took the losses, and left it the way it is. So basically, it was at 44,000 profit. So we had a little bit more than the 500,000 we usually have to start this portfolio. So when you look at what is now wow, what happened? What the hell? Oh, it logged me out. Okay, so now if we look at the long-term portfolio, this was the short-term portfolio, just to be clear. Okay. So there's not really new positions there. Well, I'm sorry, there are, because we added a bunch last week. But here's those original 3 puts. This is all from the old short-term portfolio, which has basically been renamed the long-term portfolio, and cash was put into it. So now we have 530,000. Notice we lost money. Well, I don't want to call it. I mean, it's not really a loss. It's just we changed. There's so many changes in positions that it's hard to say. But I'd say on the whole we lost money, because we were at 644, now we're at 630. So it's been a rough week. Anyway, nothing wrong with the short puts. We added Plains American Pipeline as a dividend play. Here's Freeport from before. GM we just added. IMAX is from before. LB had a nice day today. They shot up to $23. We're going to be in good shape on these guys. That one we just added. MJ is the ETF we're just playing along with. We change it so often. It's kind of like a butterfly type play right now, the way we're playing it, but it's still good for, on our overall premise is to hold it for the long haul. So it's in the LTP. Philip Morris, long-term straight out play. TD Bank, long-term straight out play. Toll Brothers, long-term straight out play, doing very well. Vail is another one we just added. No, did we not? Oh, no, sorry. No, Vail was in there. And Viacom we just added. And I got a bunch more to add, but not until we figure out what's going on with this virus thing. I named about a dozen more things that we could be adding to the long-term portfolio. But let's find, you don't take all your cash and dump it into the market right away. We'll do fine. We'll make plenty of money. So I'm not worried about that. It's just like, let's be conservative and take it in chunks. So that leaves us with the short-term portfolio. The short-term portfolio, the new one, it's down 8.8%. Why? Because we threw a clunker into this. We threw Tesla into it, and Tesla's killing us. So Tesla at 577, we sold the short 550 calls for 33,000, and I'm sorry, for 66 bucks. Now they're 91 bucks. Now, of course, some of that's premium, but we are hoping. I think Tesla's earnings are tonight, right? So we are seriously hoping Tesla does not have some kind of blowout numbers today. That would be unfortunate for that portfolio. Yep, today. So we will hear from Tesla later, but we are playing them short for sure. Okay, because we have $45,000 worth of short calls. So we're betting they go back. We're betting that they're back below 550 in June, Whereas some analysts are saying Tesla 10,000, I mean, Tesla 1,000 won't even be close to enough for them. It's absolutely insane what people are projecting for this company. And, you know, we sold the short puts, but those short puts they were for 30 bucks. They're never going to come close to covering if we get a blowout move up here. Even a 10% move up is going to be devastating for this. So we're sitting on it and seeing what happens. I mean, I've just got the conviction that it's not worth it, but that doesn't seem to bother Tesla investors very much, whether it's worth it or not. Now, FXP was our short on China. So that's working out okay so far, but we'll see how it goes. CMG is Chipotle. They'll have earnings. We're betting they miss also. UNG is a natural gas long. USO is the long on oil. And again, like I said, you can still play this right now. It's basically the same price. And actually, you can play the natural gas one too. They're both long-term longs. So those are good to play. Tesla, I'd stay away from. It's too crazy. SQQ is a hedge that we're using for the, you know, to protect the long-term portfolio. FXP is a hedge on the virus being really bad. CMG is just a value play. But notice the point of the short-term portfolio, we mostly try to find plays that do well when the market goes down, because the long-term portfolio is a much bigger portfolio. It's $500,000 compared to $100,000. So the long-term portfolio is playing the market bullish. So this one is here. The short-term portfolio's purpose is to hedge the long-term portfolio. That is the main function of this portfolio. So let's see. So that was, all right, so we don't need to go over the reviews, but I'll just give you an idea of what we do when we're doing the reviews. As I said, now remember, this was in the old short-term portfolio that has now become the long-term portfolio. So CBS keeper, Cisco keeper, M keeper, CMG we transferred to the short-term portfolio. FCX we kept, IMAX we kept, MJ we kept, and we changed it a little bit. Philip Morris, we kept that. SQQ we transferred to the short-term portfolio. TD we kept, TLT we cashed in, that's gone. Toll Brothers we kept. Tesla we transferred. And as I said, we just took the loss on Tesla, and then we made a brand new play, which is the play that's in there now, which is now taking a huge loss also. So if it wasn't for Tesla, we'd probably have like another $50,000, $60,000. That thing's just totally killing us. I mean, we were doing so good on our base picks, and that one just took a lot of it away. And then Vail we kept, and that was that. That was easy enough, right? So we'll just look at how the portfolio is live instead of going into review. So the butterfly portfolio has really kicked into high gear. Oh, 99.9. So the butterfly portfolio is at 99.9%. A lot of that is because of Apple, but Apple is giving and taking away because we also, wait. Short put, short call. Oh, that's right. Okay. So Apple gives and Apple takes away. So we have these 240s that are way too deep in the money now. Okay. We already had earnings. So that's water under the bridge. And that never filled, son of a bitch, and it's gone now. See, I was too greedy. All right, forget it. Now they're coming down though, the indexes, so we'll see what happens. Now what we're gonna do, Apple, right? So Apple, we've got the 240 calls for 2022. And they're like $102. So how much could we take off the table? What are our shorts is a question. So our short position is the 310s. So we don't want to give up too much space, but we would like to take some off the table. It's a little tricky right now. So 240, 310. So we can't go too much higher. I don't know if it's going to be worth an adjustment. That's a shame. You know, what we could do though is move to, if we went to the 300s, we get, this is 58, 59, 59. So 59, and this is 102. So let's see. Got 102 minus 59. That's 40 something bucks, 43 bucks. And that's the 310s. But now the question is, what's it going to cost to move the 310s? And if we move those to the 370s at 33, well, then it's 52 minus 33 is 21. Minus 21 is 22. So we could move to a roughly the 310, 370 spread instead of the 240, 310 spread. It's not quite as big of a spread. It's a $60 spread versus a $70 spread. And we take 22 bucks off the table times 60. That's like $135,000 off the table. And don't forget, this is only it's only a $100,000 portfolio. So, we're not talking about like nothing here. It's a big deal. I mean, if you can take the entire value of the portfolio off the table in cash, that's going to greatly increase your buying power and everything else. So this spread, which is $70 and can only generate, obviously 7 times 6 is what, 42. So it can only generate $420,000 total if it's in the money. If we move it to the 310, 370 spread, then this spread is going to be able to generate $360,000, but we're going to take $135,000 off the table now. Well, that makes sense. $135,000 off the table, and we're only reducing our maximum payout by $60,000. Now, we're raising the bar though to 370 for our maximum payout. That's a serious consideration. We are less likely to achieve our maximum payout. And then we got to weigh that out against, well, what happens if Apple drops in 20% instead of gaining 20%? What puts us in a better position? And we'll lose less on the way down, and then we could adjust and we could sell the same short puts and short calls. I think at the moment, given that we're short the 300s and the 300s are 20 in the money, I think we can go without the adjustment for now, and we'll see what happens. Well, we're not going to wait until January, but we'll see what happens after earnings. I think that's the way to go. I would like to ideally take the 100,000 off the table because, like I said, 100,000 more in cash is going to give us $300,000 in cash, and it won't change that value very much. So we'll still have 200,000. We'll have more like, yeah, we'll have at least 300,000 in cash. And then the value will still be the same 199, 200,000 value, but we're going to have a lot more margin to work with at that point because we have more cash and we have a less risky Apple position, because the 240 can really hurt us if it sells off. Because look at this, $616,000 worth of Apple of a call. So obviously it can hurt us. I mean, as it stands now, we can net this thing out completely. No, because we got that minus 200. See, that's the thing that's killing us. It's that minus 200. We could net this out completely for about 100,000. We could take more off the table now than we could net out the entire spread. And there you go. Those are very good reasons to do it. So I think that's going to be the move we're going to make. But let's and we just had Apple earnings. I'm sorry. So we had Apple earnings. We know what they were. And it doesn't look like Apple's going to go appreciably higher from these earnings. But also it doesn't look like there's any reason for them to go lower either. And if we grind Apple out at 325, this number goes from 49 to 25, and we pick up this much in profit, $100,000. But that doesn't change anything down here, because this would be worth the same, that would be worth the same. If we bump these up to the 310s, we'll start losing premium. We have to consider that. So if we go to 325 and this is 58, and it becomes our primary long, that's going to go down by 20 bucks, and that's going to drop half of that, which is going to be 170,000 down there. But then we've got the short calls, and they're going to lose money, and then we have to weigh that out too. So lots of consideration. There's a lot to consider. And the primary thing though is why would I have, I don't want to have an Apple 310, 370 bull call spread if I don't think Apple's going to go to 370. And in 2 years, will it grind out 370? I think it probably will. It's only, 15% higher than it is now. It's not like you're not asking it for too much. But I don't really have enough advantage maybe to do it. It's a tough thing. It just kills me to leave that much money on the table when I don't have to. So that will be considered. We have to think about that in the butterfly portfolio. John says, will the money to our portfolio be replacing the options opportunity portfolio? Was really hoping for to restart the OOP. John, you're going to get your wish. Yay. We're going to restart the OOP when Trade Exchange goes live. And what's Trade Exchange, you say? Let's see. Trade Exchange. Trade Exchange. I hope that's right. Yep, Trade Exchange. Trade Exchange is, do they explain it? Learn how. What happens here? Who we are. Okay. We are an independent marketplace for PSW Investments owns this company. We own about 10% of it. We were one of the original investors. We are an independent marketplace for subscription-based investment information centered around comprehensive analytics, provide investment, blah, 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 blah. Anyway, we track all trading activity, including the ideas you receive. So in other words, when I send an idea out, the Trade Exchange will track it, and it will allow you, like you'll get, not only will you get the trade on the phone, like a top trade alert, like the way we do our top trades now, you'll get the trade on your phone, the trade idea, but you'll be able to click and find out more information about it. You'll be able to see the write-up and so on and so forth. So you'll get like a text, and if you click on the text, it'll open it up. You'll be able to see exactly what the trade is, what the reasoning is for the trade, and then there's a button that says trade it, and all you got to do is hit trade it, and you're already linked to, part of your setup. It's linked to your broker account, and it sets up the trade for you, and you just press go, and it does it. How's that? So that's this really cool technology we're rolling out. It's been a massive thing. We've been spending more than 2 years on it with patented analytics, and it's going to track the portfolios. It's going to track the trades. It's going to let you know what happens. It's going to make sure everything is right. You'll be able to see the exact performance of every analyst based on the actual trades that are made in the system. We have entries, exits, allocations, blah, blah, blah. Every trade is recorded in real time before it enters the market. And partners are me. Oh, look, I'm a partner. And these guys, and we're going to get some more people. We're going to line up more. We haven't really announced it yet, so we haven't got any people. It's great. We have people from Goldman Sachs and stuff are working on this and part of this team. So it's a big, big deal. It's like got a lot of huge people, top traders. We have a person from Robinhood Trading working on it with us. It's a big, big deal. It's going to be a huge rollout, and plus it's going to make millions and millions and millions of dollars for PSW Investments, which is always a fun thing. I think currently we're doing a round that's I think about $50 million valuation, so we own 10% of the company, but that's nothing because this thing's going to go public for hundreds of millions of dollars. It's because if we attach ourselves to Robinhood's already a multi-billion-dollar company, and there's a whole weird back thing, like generating traffic and generating trades is very, very valuable, and that's what we do. So we're like the trades funnel through us, and we get a cut of everything, of all the market activity, because we effectively become market makers. So in the background, this makes a fortune, even though it doesn't really cost the consumer much. But also there will be a subscription, so people who want to follow my trades. You only pay like $1 a trade when you make a trade to Trade Exchange particularly, but as a subscription service, if you want to subscribe to Phil Davis's trades, you'll pay money. Trade Exchange gets 30%, and I'm going to get like 70% for PSW does anyway. And then there's a big subscription bump for us as well as far as those revenues go, and plus our participation as profit as part of the company as well. So it's going to be huge, and we're going to benefit from the major advertising, so on and so forth. This is one of the reasons I moved towards joining the street, because we're going to be on the street soon, and it's the same thing. It's just we want to now we're moving to a phase of like generating a large amount of traffic for various products that we have, and anyway, so the bottom line is, back to your question, we're going to start with the option when they have options. They don't have options yet. They got to still finish the options part of the platform. But that's what we're going to do. We're going to replicate the options opportunity portfolio here, and possibly also over at the street. So, and when I say that, I mean, if you're a PSW member, you're going to see, if you're a chat member, which I think you are, if you're a member of PSW, you're going to get access to that also. So, everything starts at PSW. That's always a rule. I've never signed a contract with anybody that says anything other than PSW basic and premium members. You can have an exclusive, but PSW basic and premium members get to see everything. That's the way it works. So if we do a portfolio, I'm sorry, well, we haven't had one in a long time. Any non-premium portfolio the basic members can see. If we do a premium portfolio, again, we used to have one for high net worth trades, but if we do, there hasn't been a demand for it, so I haven't bothered. But if we do a premium portfolio, that's the only thing you wouldn't be able to see if you're a basic member. But if you're a basic member, otherwise, everything starts in the chat room. So you'll be able to see whatever. So it's all included. It's going to be very cool, though. So Brendan says, what adjustment to IMAX would you consider making? Well, it's not in this portfolio, so I'm not even going to talk about it now. All right, I'll get to it. Here's Disney. Disney's kicking ass force. It's right on track. It had a nice little sell-off. We sold the April 145 calls. Oh, you know what? We used to have more of these, and we bought some back, which is a shame, because it would have made a lot more money. But what the hell? We were worried ahead of earnings, but it turned out, it wasn't the earnings. It's a stupid virus thing happened since then. So they shut down the parks, and there's a thing. It doesn't change the premise of the trade. Overall, we're very happy with it. It generates such a huge amount of income. We sold 35 short calls, and now they went from $12.50 to $12.76. We took half off the table at $6, which was still a 50% profit. So we already took like $30,000 off the table. Or 15, I'm sorry, not 30, sorry. We took 15 of 35 off the table. That's what we did last week. And we dropped it down. So we took about 15,000 or whatever, $12,000 off the table of profit last week. Now we're at another $20,000 in profit. We have these short puts. So the 2022 short puts are part of the long position, right? That's an artificial buy right. The short June 130 puts, that's our lower limit, and the short April 145 calls are our upper limit of the trading range, and we're being obviously successful on both sides. But notice we sold, and remember, this is only 20 out of 35. So we sold $40,000 worth of short calls and $11,000 worth of short puts. That's $50,000 of shorts in one, well, let's see. That's in the 6-month period, basically. And that's against a 70 minus 8, so about a $60,000 spread. So against a $60,000 spread that has 2 years to sell, in 6 months we made $50,000. That's gigantic. But that's what the butterfly portfolio is all about. It's about selling premium. We establish a long position to protect ourselves against a big pop that makes it run away on us, like Tesla has in the short-term portfolio. And we didn't do that. Had we done this with Tesla, we would have been in much better shape. But it wasn't meant to be a butterfly spread. We didn't think it would ever blow up the way it did. Mondelez, we just rolled these out. So again, we have our basic long position is the 2022s. So we have the 55, 62, 50 spread. That's not much. That is not a lot of protection. It's only 750 in protection, but that's because we don't really think Mondelez is going to be any kind of big mover. So we're just doing some very basic protection, very, very cheaply. and we sold the $50 puts. And again, because we feel that Mondelez has very good value, so it's not likely to go lower. So our artificial protection is really 2750 spreads, $15,000 worth of protection that we bought for 11 minus 11, basically. We bought it for $1,000. So the net cost of our long position is about $1,000. And in the first 6 months, so we have 4 sales cycles like this to sell, we sold $4,000 worth of puts and calls. And I'm sorry, that's not true, because these are the Junes. We already cashed in the last set with a $2,500 profit. So the first set in 3 months, we made $2,500, and now we rolled these over because we had sold the 5250s or something like that, and it came out like near 55. And now we sold another $4,000. So we're ahead like 2,500 so far. If we cash in these, if we happen to hit our target at some point, we make the whole $4,000, and we get 8 chances to do that over the course of 2 years to make $4,000. Sometimes we'll make $4,000, sometimes we won't make $4,000, but we have a very good chance of making some $4,000, and that never changes the fact that our spread was only a net $1,000 spread. And not only that, though, but if Mondelez does go up in price, anything we make off that spread is just a bonus. That's the beauty of the butterfly portfolio. It's a very, very safe, very stable way to just grind out cash on a regular basis. MJ, this is the MJ ETF. We learned our lesson last year not to be aggressive with it. It has so many problems. There are so many companies with so many problems that it never actually goes up in any significant way. So it's better than it was. Not much. It was drifting along 60, now it's 1720. So it's not really better than it was. I thought I forgot to pull back again. But here we have we have the 2022 puts, which are in the money, but they're okay. They're doing all right. Why? Because we sold a lot of premium. It hasn't gone down that much, and time has expired, so we're ahead. We have the calls, which are out of the money, and they're eroding, but they only have 348 to erode, so they're not eroding so badly on us. But the April calls that we sold for $7,000 are getting crushed, and we already made $2,500 on those. And again, we sold those in November, and they're for April, so that's 5 months out of 24 months we have to sell, so maybe 1/5. If we can make $35,000 selling this off a net $1,000 position, that's good. And oh, I'm sorry. And then we also covered with the so it wasn't even 1,000 because we sold these puts. So it was 1,000 minus another 6,000. So it's a $5,000 credit on the long spread, and we're selling $7,000 worth of calls in a 5-month period. So basically $1,000 a month worth of calls against a $5,000 credit. And again, anything over 20 is just a bonus for us on MJ. And worst comes to worst, we'll end up owning the ETF, and we'll have to sell some more stuff. But point is, we learned our lesson last year. We were playing it aggressively and thought it was going to go up. Now we're like, screw that. Let's just make the money selling the calls. It's a lot easier. Whirlpool, I thought they were going to be stronger. They weren't. So we're going to have to. We don't have any puts. We bought those back because we were worried about earnings, but earnings turned out to be fine. And I don't think they're gonna have any particular problems. So we'll sell some more puts next time they have a dip. But for now, they're 100% in the money on the long spread. And we sold the 160 calls in June, which is quite a bit out of the money. So we're not too worried about that. Good trade. US Steel, here we gambled and thought they would go higher, and they didn't. We bought back our short calls, and we don't have any short-term calls that are being sold. So big loser on US Steel so far. I think we are going to play this a bit more aggressively, though. We're going to take advantage of the dip and play that a little more aggressively. So that's it for the butterfly portfolio. Dividend portfolio, no touchies. We're done with this. It's set. It's set in stone, and we're just going to watch it for 2 years. So I'm not even going to bother reviewing any of that. It's just the way it is. The way it is. Earnings portfolio. This is something we'll start playing with again. Aurora Cannabis, disappointing. Anything cannabis been disappointing stock-wise. It's terrible. Cleveland Cliffs, also disappointing, but that's because of the China problems. Oh, no, 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 don't do that. Go away. Ugh. Pick a time. How about like 11 p.m.? There you go. I should be done by then. On Saturday. Oh, okay. Fine. Pick a day. Saturday. Now go away. I don't know. So Cleveland Cliffs eventually, you would have thought with the China deal they would have gotten better, but they're right back down. CLF. Ugh, look at that. Really bad. But again, we like to have them. We always play them. They always do this, and then sometimes they do that, and that's when we get out. Not here. We already have the $5 calls. There's really not much to do with this thing other than you know what? There's nothing to do with this at all because it's hardly making a difference, right? 295 to 267, 130 to 87. It's not worth buying back, and 235 to 190. It's just not worth it. It's a nothing. We came in at a very good price. That's why. H&R Block, I like it. Coming into the tax season, we'll see how that plays out. IMAX. Now, who asked that question? Was it this position on IMAX? Brendan said, and he asked about Cliff too. So no, it's Bernie asked about Cliff. So Cliff's deal, I just think it's worth holding until it comes around. And like I said, the position isn't worth changing. It's fine for a new trade right now. IMAX. IMAX, on the other hand, is ridiculously low. It's because of the China virus thing. That's going to go away at some point, and everybody's going to go back to the movies. So certainly I want to take advantage of this dip. How are we going to take advantage? Well, for sure we're going to buy back these June 22 calls. Look at them at 20 cents. So we buy these back and maybe add a few longs. But other than that, there's not much to do about it. Would we sell more puts? Maybe. But anyway, buy back the short calls. That's a for sure thing. For 20 cents, just get rid of them. IMAX. What are they, March? June, that's crazy. So people have completely lost faith in that one. So the June, whatever the hell they were, calls are 20 cents, 22 calls. So these calls, buy these back for sure. We have the long, 17s, 18s. We have the long 18 calls in June. And, look, the thing you want to do is they're only at 115. What if we went to see, we can go to the 15s and sell the 20. I don't even want to sell the 20s though. I think I'd go to the 16s maybe. That's reasonable enough, I think. Because let's see, if we are in the 18s. We're in the 18s. Oh yeah, that's definitely worth it then. So we're in the 18s at $1.15. If we roll to the 16th of September, we're buying ourselves some time for it to go higher, especially we're capturing the entire summer movie season, which is where we want to be. So we're going to spend, let's say it's $2.55, so we're going to spend $1.40 to roll, but we're rolling down $2 in strike. So we're going to take advantage of that. And obviously we're going to get that $1.40 back. We're going to eventually sell the 22s for maybe $1 if it ever pops back up. And if it doesn't, we'll sell something lower and then roll again. So either way, we're going to get a free roll. It's just whether it's this roll is free or whether the next roll is free. But one way or another, we'll get a free roll. As to the puts, I forgot what puts we sold. They were the 23 puts. That was very aggressive. There's no sense in moving those now because maybe it'll pop back, maybe it won't. If it doesn't, then we'll sell the September whatever. I'm certainly tempted to right now sell 5 September 20 puts for $3.40. That's a great price. So that's another thing I would consider is just sell 5 more puts for $3.40. It's like while they're throwing money at you, take it. Because it's not a great net because considering it's at 17, it's not really paying you much premium. But as far as a target goes, I just think it's stupid. I think that's why it's not paying you a good premium because the people who are offering the contracts also think this is ridiculous. Yeah, there's no way IMAX should be down to this price. Oh, Hey, what happened to the Fed? You guys talking about stocks and things like that. Who cares? The Fed just announced something. And Brent, oh wait, who's this? Brennan says it was a 17-20 bull call spread in the 20 puts. So I was looking at the 18 something. It'd be the same thing though. It's just so the point is, remind me in chat and we can go over it. But it's not. It basically, if it's the 17s, it's the same story. You just take the 17s, leave the 20s because they're not the 22s. So I would leave the 20s and let them die. I would take the 17s though and invest because it's 155 and invest the money to roll to the 16s. You're only going to spend about $1 to make that roll. You're going to roll $1 and strike, and you're going to get 3 more months to make your money. So why not? There's no reason not to. You're paying $1 to get $1 and strike. The Fed, job gains solid in recent months. It doesn't, Dow's up. All right, let's go find out what they said. I'm tired. All right, I can't be tired. I got a lot of work to do later. Because you know why? I was up at 3 and I couldn't get back to sleep. So FOMC meeting. La-di-da. What did the Fed do? Not much. Information received indicates the labor market remains strong. Economic activity has been rising. Job gains solid. Recent months. Unemployment low. Household spending has been rising at a moderate rate. Consumer confidence, by the way, was hugely strong. Business fixed investment is weak. Exports weak. On a 12-month basis, overall inflation rather than food and energy, are running below the 2% mark. Market-based measures of inflation remain low. Survey-based measures and longer-term inflation. I think it was Dudley at the New York Fed got booed because he was trying to explain like there's no inflation, and his example of why there's no inflation is he's saying, well, you used to spend $1,000 for an iPad that had 128 megabytes of memory, and now the same $1,000 for an iPad, you get a twice as fast processor and you get a terabyte of memory. Therefore, your iPad is 60% less expensive than the old iPad was, and that's a nonsense argument. And the Fed does this a lot. They use equivalency to measure inflation. So in other words, they say if you're getting more for your money, if you get a bigger TV for the same money you got a smaller TV last time, that's disinflation, that's deflation. If you get a better phone than your last phone for about the same money, then that's deflation. They're saying that those things are a benefit to you, whereas in reality, it's a phone. It does the same thing the other phone did. It's like you don't care if you have more gigabytes, you're not using them anyway. You don't care if it's faster. You might care, but it's not really creating some huge economic benefit for you. And if you could buy your old phone, which was just fine, for half the money, you certainly would have done that. But you're not given that choice to buy the lower cost phone. You're basically forced to buy the same phone with more features for the same money. So there's no deflation to you, but the Fed counts that as deflation because they take into account the processing power of the phone, how much ink you get out of an ink cartridge in a printer, how big is your screen size, all that stuff the Fed counts. They even count like if you have cookware and it lasts for, if they give it a 15-year guarantee instead of a 10-year guarantee, they tell you that's 50% cheaper cookware. I mean, that's, crazy stuff like that. And so Dudley was trying to justify it to like an economic group in New York, and they were like, get out of here, you idiot. They weren't buying it. So no surprise, the Fed is keeping the target range, and they're not changing any language here at all. The Federal, the committee, there's nothing here. Okay, let's see if we find one of those people who parses the Fed. It's my Twitter. I don't have Twitter? Huh. Well, TWITTER. What? How did they know I wanted to be here? Whoa. Okay, that's freaky. You all just saw that, right? So look, this is how much was changed. October was changed to December. Strong was changed to moderate. Um, wait. Is this the right one? This is so weird. Returning to consistent mandate, committed and maintained. How can you tell if they change it? Um, job gain solid, economic activity, business. It said something on business activity. Information received since met in December. Yeah, this is a new one. Wow. Where is the thing said business spending, economic activity rising moderate, job gain solid, household spending rising, business fixed investments remain weak. That is the same statement. Okay. Wow. Where is this a change? They took out a dash or a space? That's so weird. Okay. Wait. What's that? Returning to, as opposed to what? Near. Ooh. The committee judges the current stance of policy is appropriate to support blah, 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 and inflation returning to the committee's objective. What the hell's the difference from near and returning to, do you think? Anyway, so that's interesting. 3 words were changed in the entire statement, and one was a calendar change, obviously reflecting the time of the statement. So 2 actual words were changed. Strong became moderate. Household spending is no longer strong. It is now moderate. Business fixed is weak. And consumer spending was way off in December. They just did a thing. They just had a thing today. It was a very big downturn. Housing turned down sharply also. So I don't know what they're so excited about. I really don't. But meanwhile, I bet I can fill my Dow shorts now. La di da. Nope. It was this one. Oh, I missed it. Missed it again. Shit, that didn't last long. That's what it spiked up on the Fed thing. Now it went right back down because it really is. There's no big deal to that statement. And oil never came down. We missed that too. All right, well that's the way that is. All right, so not much happening in that case. Very boring. All right, let's get back to the portfolios and see where we're at. That is where I was at. Earnings portfolio. So H&R Block, I like into the tax period only because people start thinking about them. It's like, people go to H&R Block and they start thinking, well, that must be a good stock. Look at all these people doing their taxes and such. It just happens every year. So, and I understand that there's less and less stuff online, but they're actually advertising some new service. So I like them just because of the sentiment changes a little bit in their favor. IMAX we talked about. iRobot has, wait, what? Oh, we have the 40-65 spread. I see. We have the 40-65 spread in the short 40. Well, I'm not worried about that. We're up in the range of the 40-65s. Did it come down a lot though? Because it seems to be like it's a really wide spread. IRBT. No, it didn't. We just thought it was going to pop higher. Okay. So that's a good one though. I like them. And I mean, it's up $6,000. It's not terrible. It's just a matter of, want it to be more on track than it is. Although we got 2 years, so I'm not worried about it. Macy's still playable. I love Macy's, and we should make that a bigger position. Oh no, well no, for this portfolio it shouldn't be bigger, but it should be in the long-term portfolio as a bigger position. And then here's a hedge. We have a hedge in this portfolio, and that hedge is doing very well. Holy cow! Despite the big move up today, this hedge is doing very well. Why? Oh, because we sold these short calls. That this hedge is doing well because we sold these short calls and moved this one out to January. That was one of those deals where these were probably the 20s in March, and we rolled them out and we took the loss and whatever. All right, not bad though. Very, very good. And that's what you do. I mean, you maintain it. Then we got the hemp bokeh. I don't know how that's doing. I haven't touched that in ages. 8.5%. That's not bad. And long term, did we just talk about that? Am I confused? Yes, we did. We already looked at that. See, now it sucks because it doesn't look very exciting, but 6% is still like $30,000. It's not nothing. It just doesn't seem exciting anymore because you got so much of a base and we're not using it yet. But 6% doesn't suck. Then we got Money Talk, which I'm on Wednesday, 5.7%. And we looked at the short term already. So that's it. That was a good portfolio review. I'm very pleased. All right, so that's it, guys. There's not much else going on, I don't think. And if you have any questions, ask them now, because I'm not really into like just talking for no reason. It's just not just not one of those days. But I think everything's in order. We've decided that we're going to leave off with these shorts on the market. And that's good, that's good, that's good. They're all losing right now, so there's plenty of time to get in. The Dow, 28,869. 28,8, so I can do 850. That was my goal. You should take this. I'm going to leave that because it should fill that at some point. Powell's giving a conference now. Oh yeah, let's find out what he says. All right, I'm willing to do that. Let's take a look. I'm going to put the sound up a little bit. Oh, I'm bored.
Half-century lows for well more than a year, and the pace of job gains remains solid. Participation in the labor force by people in their prime working years ages.
Oh God, no, this isn't good. This is just his boring speech. That'll be 15 minutes, and then they're going to go into a Q&A, which might have something interesting. We want to try to get some insights into what he's thinking about. So let's just do a quick look at the news then. I think that's freaky about Twitter, though, right? Why did he do that? I find that really disturbing. Right? Because I started Twitter from scratch. It wasn't on Twitter. I typed in Twitter, and it came right up to the exact thing that I wanted. That's freaking, I mean, I don't know. I mean, I guess that's how computers are supposed to work. I suppose if we had actually artificial intelligence, that would be the way it should work. It's say, oh, I hear Phil's talking about that. I bet he wants to see the Fed statement. But, that's spooky. All right, so that's really weird. You guys saw it. It's on tape. So, I mean, just tell me if I'm nuts, but I don't think I'm paranoid. I'm pretty sure that thing was totally somehow tracking what I was saying. Ooh, Tangier Factory Outlet says the safest dividend is the one that's just been raised. They raised their dividends. That's so cool. Ooh, because we skipped the dividend portfolio. You guys know this is my favorite REIT, right? That's SKT, Tangier Factory Outlets. And we bought them for 17. We were very conservative. We sold the 15 calls and the 15 puts. And that's where we are on that one. That's a good, but I love this, and this is still good for a new trade because look, it's in a losing position at the moment. There's no way I don't think this is going to make its money. And they pay a huge dividend too. It's like 8%. So that's interesting. News. Okay, markets. Where's the word news? What? Oh, I see this up here. No, you have to be premium to see the news? Am I premium? Apparently I am. Okay. Apple hires Netflix engineer, so what? Bad for Netflix, though. Empire Lyft announces restructuring. Ooh. And Uber is just doing good too. Uber just got some nice noises, and I can't believe Lyft is hurting. That's terrible. Look at that. Wow. Who'd have thought? I think Lyft is so much nicer than Uber. I think they're just nicer people. It just seems like I don't know. I just get a better vibe from that company on the whole, but not good. So I don't think you want there to be only one because Uber's also more expensive. Lyft is definitely cheaper. It certainly is in Florida anyway. What else are we looking at? News. Okay. Fed keeps policy on hold. Fed kept it on hold. Judges the current stance of monetary to be sustained. Blah blah blah. Gives no hint. They keep buying Treasury bills until Q2 2020. That's important too. That's a QE policy that keeps going on. They continue overnight repos, which is crazy, through April. Oh my God, there's got to be something wrong there if they're still doing that. Since September, they've been doing this repo stuff, and they're still doing it. Home building index was pending home sales were terrible. They were down significantly. So I was just told we have a couple of builders, but they're doing okay. Facebook refining its watch spending. What does that mean? I don't even know what Facebook Watch is. I guess that's their streaming thingy. Semi-slide. AMD and Xilinx weren't very happy. Microsoft coming up. That's a biggie. Another $1 trillion company that gets to report. GE still up 10%. Penn Gaming, Pemex. Ooh, New York pension fund might be dropping coal companies. Not a word about the virus. Just this one thing up here shakes off virus fears. Where was that? Stock shake off virus fears on earnings. I mean, for God's sake, how do you ignore something that big? Oh wow, there's like nothing going on. Wedbush, Textron raises prices. 737. Oh, they make the 737 Max simulators. How nice! How nice for them. How are they doing? This is how I get my stock ideas, by the way. I think I look to see if they're undervalued. I see they're in the news. I say, oh, they're undervalued. Oh, they are undervalued. Look at that. Uh-oh. Could be a trade. Nope. TXT. Because I already know I'm predisposed to liking them. They've got a low PE. They're at 10 point. They're only at $11 billion. Oh, we're gonna have to add these guys. This is a good one. See, we thought we weren't gonna do anything now. Financials. $11 billion, and I get $1 billion in earnings. That's what I like to see. Not a billion, $1.2 billion. That's not bad. I like that. Where's my thing? Oh, here we go. Oh, stop it. You have not made changes. TXT. Textron. Okay, $1 billion, but 840s. All right, that's still not bad though. They're going to be, I'm only paying 10, 11 billion for them. I like it. All right, let's make a trade. Gonna tell my people, you are my people, but tell the other people. Finishing the webinar, and I saw this. Because this isn't a small thing. They need simulators everywhere. It's going to be a huge freaking contract. So, see, and this is how a trade gets made at PSW. Because I know I like Textron already. They're a good company. Got a lot of good divisions. Boeing's been grounded. Donnelly commented. Shares enjoy gains. Company better than expected. They already had better than expected earnings. Inline guidance for 2020, 350 to 370. So you're barely paying, you're paying about $12, $13 a share. I mean, I'm sorry, 12 or 13 times earnings. And I think they're going to get a boost at some point. What's going on here? Number lock. Okay. For the LTP, let's add, now I have no idea what I want to add yet, but we'll figure it out in a minute. TXT. Oh, they don't go out far, those bastards. Oh, that's weird. December 21. But nobody's trading it yet, I don't think. All right, that's okay, because they're at 47, and we can sell the $50 puts. Well, these are weird numbers, right? These are very thinly traded. That's a shame. Quick short. Where is it? $8. There's no way you're gonna get $8 for that. Oh, so annoying. All right, we got to think now. See, when you can't figure out a spread, when you look at the spread and it's too wide, you have to see what's realistic. So here's what you have to do. You have to find a spread that actually is realistic. So this one's $2 to 276, and 215 was the last. Okay, that I can believe. If this guy is 215, you can't tell what that is. But if that's 215 and then $5 higher, should have a delta of something like $2 more. So this one should be this should be 415 at least, and these should be then 615, or yeah. So these should be at least $6, and I don't mind that. So if we sell the $50 puts for, let's say, 620, I'm gonna go with that. I think that's a good price. So we want to sell the puts for 620, the January $50 puts. Oh, I get to see January again. That makes me happy. So let's add sell 5 TXT January $50 puts for 6.20. That's going to be $3,100. And then we're going to buy same problem though. It's going to be tricky to find the right spread. This was 650. That seems about right. And that's 415. That seems about right. Okay, good. So let's buy the $45 calls for 650. All right. So then we want to buy 15 TXT Jan $45 calls for 650, and that's God knows what. 650 times 15. Oops. 9750. 750. And sell 15 TXT Jan what? Now, how do we figure this out? This is a small position notice, so we're not too worried about it. I don't want to sell those. Ew. Oh, that sucks. Sell a 55 for 2 1/4. Yeah, I guess we're gonna have to. Well, let's get 250 for them. That means we'll wait. That means that, that means now since we're bullish, it's okay though, because we can fill it later. You don't have to fill it all at once. So we'll fill the short calls later. So we'll sell the which ones were those for 250? They were the $60 calls. that too aggressive? Nah. Oh no, I'm sorry, it's a 55 calls. The 55 calls for 250. So the 55 calls for 2.50. And that is $3,750. $3,750. All right, good. So that is then, let's double check. I want you to make mistakes. 9750. Oh, come on. 9750 minus 3100 minus 3750. 2,900. That's net $2,900 on the $15,000 spread. That's, where are we at? 47? Well, it's not really in the money. With well, it's 13,000, 12,100, 12,000, 12,100. Damn it. So 12,1 divided by 2,9. 2,1 divided by 2,900, 417%. 417% upside potential if TXT is over 55 in just a year. I think this contract should do it for them, and they are under priced anyway. All right, and then all we have to do is turn it blue, bold, and blue, and indented, and that makes it official. And that's how we make a trade. You know, so in other words, Textron's a company I already like, and so a little thing like that makes me worry that it's going to get away from us. So we'll take a small little trade. It's not, it doesn't seem small. I mean, it's using very little cash, very little margin, but it puts us in an excellent position to make $12,000, which is, you know, not a huge amount in the LTP. And actually, frankly, I would like it better if Textron comes down lower and we add to the position over time. But at the moment, that's a good starting position. Worst comes to worst, it's using almost no margin at all. It's let's see, the short 50 puts. So if we sell 5 of those, $2,700 in margin. So for $2,700 in margin, we've got a trade here that can make $12,000. You know, we're not going to use all the cash in the LTP. We never do. So we may as well do that. And if it works out, it works out. If it doesn't work out, it doesn't. You know, if it doesn't work out, we'll turn it into a more serious position. But if it does work out, oh, well, $12,000 gets thrown at us in exchange for tying up $3,000 worth of our margin. So why not, right? That's the way I like to find trades. You know, so in other words, it's a perfectly good stock in the first place. I would have bought it anyway. But this is the little nudge I want to say, okay, you know what? This is something we definitely want to do. You know, when you're buying a stock for 50 less than $50 and it's making 350, 370, and they've got a catalyst, that's all the great reasons. Everything's lining up there. Bitcoin's doing very well, but it's doing very well because it started in the slump. So I don't know if you call that really well. Oh, Atlanta Fed down to 1.7%. Aha. And again, the market doesn't care. Oh, it cares a little. It slips. We slipped a little bit now. So the Atlanta Fed is going down and down, and apparently the top and bottom forecasts are still like in a pie in the sky mode. So people are going to have to start bringing their forecast down, and that's going to start hitting the market too. Many reasons to be hanging on to hedges here. Apple's India online sales starting whatever. Unfiat UFI. I don't even know what UFI is. Miracle Grow. Wow. Oh, Miracle Grow is doing really good because of like cannabis, indoor cannabis and stuff. Yeah, strong demand nearly all categories of indoor growing equipment and supplies. In other words, for cannabis. So funny. Fidelity adds fractional trades, bid for millennials. Ooh. Yeah, they're doing that. They're letting you buy like a teeny tiny piece of a stock, which is kind of silly, but I guess it's not terrible. I mean, if you want to own Google, you can't afford $1,000. People are buying $5 worth of Google now, and they're putting it in the portfolio. Starbucks plant-based breakfast items. Oh, wow, that's big. Who's doing that? They're not saying who? Oh, that's a huge win for somebody. So now they got chicken. So I saw earlier somebody's doing chicken. Business uncertainty rises, although nothing drastic there. Oil inventories we talked about already. Boeing's conference call, I'll read that later. That's interesting. Oh, MoviePass is finally dead. HMNY, Harmony. Finally giving it up. And we thought that was going to make it, but they didn't. They really imploded. They did everything wrong. They were terrible, terrible operators. They had it. They had a great idea. They had a concept, and they just blew it. They should have gone straight to AMC or somebody like that and done it with them. Instead, they alienated everybody. People don't get that. You come up against these billion-dollar companies, and it's like it doesn't really matter if you beat them to the punch, because they have a way of punching back. Hasbro headwinds, blah blah blah. Okay, nothing too exciting here. So let's see if anybody has any questions. There's nothing. Nobody's flying to China. That's another big one. That's going to impact travel and everything. And nobody has any other questions, so that's going to be it. Okay, we don't need to read all the news. We just read the latest news, and there is one good trade idea, which is frankly all I ever want to find out of a day, right? Fed sees continued growth even with the virus uncertainty. Well, they see growth, but they certainly downgraded it. He observed some uncertainties, chiefly regarding trade tensions have diminished. Yes, that's true, but others have emerged, including those posed by the virus. All right, so tomorrow, like I said, I mean, right now I'm not changing the main hedges, but we do have now. We have 2 shorts on the S&P. We have 1 short on the Dow. I still never got that fill, unfortunately. It's too late now. It's gone again. I think I'm too greedy when I do that. But that's I already have some, so I don't want, why should I add another one if I'm not going to get a price? And we got the NASDAQ is still failing where we thought it would fail, and oil's gotten away from us, so the hell with that. So basically we have 2 shorts here and 2 shorts here on the NASDAQ and the S&P. And we're thinking maybe if the World Health Organization declares a global emergency, we get another nice big drop tomorrow. So we'll see what happens. All right, thanks everybody for coming, and we will do it again next week. All right, we won't do it next week. I'm going to be on the TV next week, so obviously it won't be Wednesday. Probably we're going to skip next week. We'll see. I'll let Greg know, and we'll put it up there for you guys. All right, and like I said, we'll do the IMAX, the rest of the adjustment in chat. All right, so thanks for coming, folks. Have a good day.